Hi, Mark. How are you?
Good. How are you?
Good, thanks.
Actually, Mark, we were talking about quantum computing, and Bill just joined back in, I think. So you missed part of that, but
I just want to say hi to Vasily. Are you there? I haven't seen you in ages. Vasily Sidorov.
I'm here. Sorry, I'm
You're good.
in a gym, so I don't want to embarrass myself or anyone.
Fair enough. You probably know Shiv from your Russia days, right?
Of course, I know Shiv very well.
And Simon.
Hello to everyone. Hello to all the familiar names and faces.
Excellent. Talk about knowing telecoms too. Vasily has he knows the space.
Yes, thank you.
Mark, while you stepped away, Ron asked a question about how far away we are on quantum, and I think Bill might be able to answer that from the event last week on cyber.
Or can you also do it by way of when will we have a deeper dive on quantum then?
I've created a rabbit here and it's reproducing like crazy. So yeah, I actually that's really interesting. I think the plan at this point is probably to generate 2 additional deep dives. One that's going to focus on family office and individual, for lack of a better word, hardening. Kind of what you can do as an organization, what you can do as an individual to help protect yourself. And then the other one will be a little bit more investment focus, educational content, but also investment focus as far as various verticals, within cybersecurity, because it's vast. And I think, maybe a nod to your point, sorry, I had to break away there for half an hour for a meeting, but there's to me, and I'm just getting up to speed to some degree in the space, there's a very interesting division between sort of the current existing encryption technology, i.e. the RSA, versus versus the quantum, which I think is obviously sort of like the next level. And so, there may be, yet a third opportunity to go deeper into, where are we with regard to current technology? What's the promise of the new one? And, even within quantum, as you might have gotten a flavor, from the speakers, that splits into 2. You've got a hardware and a software solution. And clearly the hardware solution, very complex and involved, whereas the software solution, that seems to be spinning up, rather quickly. So hope that helps.
Bill, did the guy from Q Square give a sense of when he thought quantum computing would be really here? I guess is the best way to describe it.
He did not, but I would say if you asked him, he would respond with, "It's here today," through the software solution. And I don't know if Mark White is on now or not, but I was surprised to hear that his company, where he's now the CIO or CEO, they are also involved in quantum-based solutions. So Mark, being the mild-mannered guy that he is, didn't bring that up until our rehash afterwards.
So let's switch. Well, I'm sure we'll switch back to cyber in some ways as we talk about 2040. But so a little bit of a repeat. But if you could twist it, Stephen, by way of an intro, that this time around we'll go through with a different set of panelists, and we're gonna have breakouts, and I know a lot of people are going to be coming back for the breakouts, and as we want to be thinking and talking about really these themes that were in the NIC report that really Stephen Burke brought to light last week, right? And leading to these scenarios where it's a little bit the rosy renaissance of democracies to the world adrift, to separate silos, including information exchange silos, to outright tragedy, and competitive coexistence being what Kissinger was talking about in his interview yesterday with Axel Springer. And I think most of us want to see, although I'm still trying to interpret what Simon Vine was saying with the, maybe he'll weigh back in on the second round, but whether we can have competitive coexistence, an enlightened coexistence with China and avoiding the outright AI wars. So with that, Stephen.
Hey, Mark, rather than go through the deck again, can you pull up that one screen that you have with the different, the five, this screen, and we'll just talk through this. So for those, rather than go through, did this morning and we did it last week. I just want to kind of step back and say this report to me is really not, it's helpful for today and in terms of crystallizes some of the investment opportunities you want to think about today, because they're going to drive what happens going forward and how these themes play out. But when I step back and think about what the report meant to me, I think it might be a different way to do this, Mark. And what are some of the key themes takeaways that I had? I would say one of the big issues that the world's going to struggle with, both on a global basis and by country, is going to be the gap between the wants and needs of the populations and the ability of governments to deliver, given the shifts that are going on in a lot of societies in the developed world, where you have shifts to more socialism or move away from the former kind of straightforward capitalism to a more of a progressive elements of it. And how do you match the needs of the population and the wants of the population with the bad finances that governments have? And how do you do both? And, everyone's trying to say modern monetary theory might be the answer for that. It's an interesting approach, but I'm not sure when the bill comes due that all works out. Another big theme for me is the lack of trust in governing institutions. And what does that mean for us going forward? Because if you don't trust the governing institutions, it's hard for them to get the support to effect the change that's going to be required, particularly when we have major challenges such as climate change and the like. And how do you get that moving forward? And then the topic we were just on of tech leadership and AI and how it's used for good versus bad. How does that play out? How do we create a more productive global economy to offset the debt loads that we have and get a more sustainable growth that is more evenly shared is going to be one of the keys. And I think that leads to the need to emphasize productivity going forward. And productivity takes many forms, including how you use how you develop your educate your labor force in a period of declining demographics. Which then leads you to, where do you invest in this kind of scenario? And it almost doesn't matter whether it's public, private, venture, whatever. You're going to be looking at the same kind of themes of 5G, AI, cyber, blockchain technologies, and the applications. Defense in a world that is going through so many dramatic changes is going to be critical. How do you defend both from a cyber and really physical defense? And what does that mean for geographies? One of the benefits that the US and Canada have always had, and Mexico, is our geographic advantage of being somewhat isolated from the rest of the world, but still having that as a natural defense. And then how do we pay for the climate change? There's a report out today that the bill is going to be something like $115 trillion to keep the climate change problem from growing beyond what we needed to do to ruin the world. So when you think about all those things together, and then you have infrastructure needs and not only climate but food supplies. I saw something from the World Economic Forum today, and I haven't gone through the article, but I saw the headline, which is the next 40 years, the world's food needs. The world's farmers will need to produce more food than they've done in the last 10,000 years. So we're having all these issues hit at once, and that's straining tight budgets for governments. When you look around the world and who's got a nice balance sheet as a government, there aren't that many. Healthcare issues as we're getting older is another big one. And it all comes down to me, from an investment perspective, how selective you're going to have to be, regardless of what geographies you're investing in, and how do you source the winners and losers in this environment? Because this is going to be such an uneven sharing of all these elements, which is going to really define, I think, which scenario is prevalent or which pieces of all these scenarios are prevalent, which I think is the more likely end place, where you get some renaissance of democracies at the same time the world's splitting apart. And then the leading countries are going to have to decide how do they want to play it. And I think that pushes the US and China into a competitive coexistence. And when you think about China as it stands today, they're very dependent on the rest of the world. So they can't isolate themselves as much as people would like at this current time, because their internal economy doesn't allow them to be self-sustaining because of their requirement for exporting to the rest of the world. So there are competitive challenges for every nation in this environment, which I think creates the need for us to rethink how they're going to evolve to work better together. And that's what's going to play out. So I think these scenarios are fascinating to think through. I do think Kissinger would be the one I would follow first in terms of thinking this through, and he's favoring the competitive coexistence, and it makes sense why that would be the way we end up. But the world doesn't always work the way it's supposed to make sense. So I think, Mark, I'll stop there, and I think we can open it up to comments from the rest of the group on it.
Well, the way I've sort of set it up is to have some, I guess you might say, some initial comments from panelists that may have thought about it, but also, again, not just 2040, but what in 2021, you have some insights. What are you seeing either in as it relates to your country, your industry, your company? And I can go in order of the pictures with Shiv Khemka sitting in Switzerland, but hailing from India and making his, I'll say a couple chapters in Russia. Rich Sobel, who actually, you'll see a Russian theme here, who's with Altai Capital, sort of another godfather of private equity in Russia, now family office, investing across Europe, US. I'm not sure Candace is going to join us, but Ron Diamond, sitting in Chicago, who's investing with a lot of family offices that you would know, and also is the founder of Stanford's Family Office Initiative, and we've been collaborating with him. Roberta, who was on earlier, who we met in emerging markets. Then she went to CPTQ, investing very large sums on the institutional side into funds deals. Anna Haskell, who's, I met her in the energy space, but she's really an investor in public and privates. Bill had spoken earlier, but really then we sort of kick it off. And the difference in this session is that we'll have breakouts. They'll be random, purposely, and the question will be the same as how we see. Do we think the NIC report captured the driving forces, the 5 scenarios where we see it as a combination, and then we come back to a town hall debrief. So with that, Shiv, I think I could spin the wheel and give you a subject and you could speak on it, but you really can speak on whatever you want to speak on. But the theme is sort of how you see the world today and a little bit longer term.
Thanks, Mark. Thank you, everyone. Obviously, from where we sit, even though I'm in Switzerland, our offices, our families, people are in India. And honestly, the way we see the world today is very desperate. You can see the scramble for healthcare facilities in India when the COVID cases are 350,000 a day and rising, 3,000 plus people a day dying. And just the facilities are overwhelmed, not enough hospital rooms, not enough, intensive care facilities. I've been on the call most of today, most of last night, with people calling desperately, family, friends, even doctors asking us to help find, using our contacts, some room, some medicine, some oxygen, etc. It just shows you what can happen with a small virus which goes out of control. And so looking at the world in 2040, I think we all need to do much more to get it right if we're going to survive. And obviously, the NIC report I thought was pretty good. I looked through it reasonably carefully. Whether it's the climate issues, obviously, which lead to food, water, the security issues, migration. Just in India, just to give you an example, the estimation is as the glaciers melt in the Himalayas, 400 million people in the Gangetic belt will be displaced and have to move to other parts of India or out of India. So 400 million people, you can understand the entire US population getting up and moving somewhere. It's a massive, massive issue. So I think that, obviously deforestation, biodiversity losses, and the huge unemployment challenges ahead, the challenges for employment created not only by technology, but also by lack of enough infrastructure, I think necessarily leads to the other sort of issues that were highlighted: fragmentation, disequilibrium, civil unrest, frustration, increased division in societies. And we see it from an economy that is, trying to work its way out of poverty into a middle income and above type of an economy. Of course, in India, you have all kinds of inequity and inequality, from extremely wealthy parts of society to very poor parts of society. And the political challenges are enormous, and how to build consensus and trust and engender collective action in a country like India, which is democratic, thankfully, is really a huge challenge. And so when I look ahead to 2040, I see the inequality gap being something that worries me a lot. The migration issues worry me a lot. And the demographics, although India is blessed with a young population that's not properly educated for the future is more like a demographic time bomb rather than a demographic dividend. So the key challenge is, how do we use modern technology to educate the young people for the future that is to come, so that they are not unemployed, unhappy, and the cause of civil unrest. So honestly, when I look at the scenarios, the structural forces, obviously, high debts, the highest debts we've seen globally, massive trade tensions between certain blocs in the world. Productivity growth is key, and productivity growth will happen. But again, will it accrue to a few? Will it accrue broadly? To me, that's a critical question. So technology, in a way, is something that could save us all if we use it wisely and don't misuse it, is how I look at it. And technology itself is neither bad nor good. It's about how we human actors and leaders actually harness the power of that technology, how we democratize it, or how we keep it in silos to take advantage of our technology leadership. I was in Silicon Valley about a year ago, visited about 40 technology companies, and was quite disappointed at the end of it, because although there were incredible things being done in Silicon Valley with AI and advanced technologies that would have a huge impact, the focus of those companies was all on the top 8% of the planet that owns 82% of the planet's wealth, rather than on figuring out how do we solve systemic problems on the planet. It was really, how do we sell more to the people that have all the wealth? And that's natural. That's part of what business does. I'm a businessman, so I understand that. But I think we need to move the game to a place where actually we think about, how do we use these technologies to solve collectively problems of the commons at scale? How do we do that? The 5 scenarios given, the alternative scenarios, a renaissance of democracies versus some few centralized control economies like China and Russia. I'm a bit skeptical, unfortunately, about that. A world adrift, I think, might be more where we are heading. A competitive coexistence, again, that would be nice. Again, I'm not too sure I'm totally a believer in that scenario. And I think really the last 2 scenarios is where we're heading. Separate silos, led by sort of the US, Europe, and some other countries, China, and its kind of, key partners on the planet, creating economic and security blocks which become competitive which might be manageable, but may not be the perfect strategy. And I also see the last one being very much part of the next 30 or 40 years, certainly 20 years, which is increased tragedy and increased mobilization as we have at the moment, where you have countries getting together to try and help, but it's usually too little, too late. And if we had dealt with the problems at the root, they wouldn't have happened, perhaps. So it's not a very positive and encouraging view, I'm afraid. But that's where I am. Perhaps it's because I'm dealing with and I didn't sleep all night, and I've been dealing with the COVID crisis in our country for the last, few days. And I lost my cousin last week. We've all lost friends. Our friends have lost lots of family. It's touching everyone, whoever you are. And it's a very sad situation. So that's my few comments.
It feels like yesterday. It was 6 weeks ago, the India deep dive. We just did not see this coming, right? India was exporting vaccines.
Absolutely. Absolutely.
Are we helping the world? The US is.
Well, a week ago, I would have said the US was not, because you had announced that you would not be exporting to India the raw materials to make vaccines. But in the last 3 days, the Prime Minister spoke to President Biden, our National Security Advisor spoke to your National Security Advisor, and we're seeing a massive help from the US, and we're very grateful for that. So thank you for that, and we're very grateful.
Well, I know that you on the Rosie Horizon, you talk about technology, and I know that's where you're investing some of your dollars. We'll come back to that. I don't know, Rich Sobel, are you on? I didn't see you. If not, we will, Ron Diamond.
Can I take a lifeline and come back in like 10 minutes?
You can take a lifeline. Roberta, or is that a joke, or you got to speak?
No, I just, give me 10 minutes.
Okay, 10 minutes it is. Then Roberta, even though you had spoken earlier, watch. She said she was here for the duration. Check this out. So I'm being abandoned by my panelists. Anna, you look like
yes.
You look like you're just on the cover of the Wall Street Journal there with that picture.
Yes, I wish.
Or maybe not. Floor is yours.
Yeah, so the 5 scenarios, as I said in kind of my clip yesterday, I believe in this third one, so which is competitive coexistence. So I agree with Henry Kissinger. I think that's where the world is moving toward a few strong, superpowers. I don't believe United States is on the decline. I think, conditions here are excellent for innovation, for creating new technologies. And I think that's going to be our competitive advantage. China is obviously growing in terms of population and the middle class. And the challenge is for China not to get stuck in the middle class and to be able to create conditions to innovate as well, and to stop the, the brain drain. I do want to touch upon the scenario, the 5th scenario, which is the global catastrophe. I think that also, as I mentioned in the clip, I think that we're moving in the right direction in terms of attaching a price to carbon, and that's essentially going to make extraction of fossil fuels more expensive, and make the industry or make the green industry more competitive with fossil fuels. And the initiative has to come from the governments, because businesses are not motivated to pay for their externalities. So that's something that has to come from the top down. In terms of Russia, I think that we are heading towards Putin, or VV, as my friends call him in Russia, has created a strong power hold in terms of allies, in terms of powerful economic interests. And it's just going to be very difficult to displace an infrastructure like that. So I think we are going to have to live with BV for as long as he is available, and it could be 10 years, it could be more, and that's kind of drifting sidelines for Russia. What happens next? Nobody knows. Russia is unpredictable. There is a strong imperial muscle memory in Russia. There is also a strong new middle class, young people who want to make money, who were not born in the Soviet Union. That doesn't include me, by the way, but the new generation, even the younger people who were kind of born on the verge of collapse of the USSR, they're motivated. They wanna make money just like everybody and live a better life. So I think there are strong diverging forces in Russia, but I think after PV, that's probably going to go in the market direction. And that's about it. I do want to say, my thoughts and prayers are with India right now. They have a lot of friends there, and there's just, the calamity is unexpected and very, very dramatic. So hopefully they can go through this crisis soon and kind of turn the wave.
Thank you.
So just going through here, Bill, you spoke earlier. I might have to call upon you again here, and if my team could find out where, unless Ron Diamond's back online.
I'm good.
Okay.
So as far as the last part, I would fall in the camp of separate silos. I think that that's what we're seeing now. I'm in the family office world, and one of the things that, it's a phenomenal market and it's growing exponentially, and, you could have all these statistics and $10 trillion and 65 trillion coming downstream to the next gen, and it's going to get bigger and bigger. That's wonderful for the family office market. My concern, however, is the income disparity that it's going to create. It's big, and it's going to be massive, and it's going to grow exponentially. So over the next 10 years, the income inequality and again, I'm focusing on the US, it's true overall, but I'm really focusing on the US, is going to get wider and wider. And without a sustainable middle class, it's not sustainable. And I'm not predicting that there's going to be anything massive that's going to happen. But I do think that as the rich get richer and the poor get poorer, and it just continues to widen and widen and widen, there's going to be a lot more social unrest. There's going to be a lot more, I live in Highland Park. It's a nice suburb of Chicago. And then you counter that with like the worst suburb of Chicago is like Elgin, Illinois, ELGIN it's spelled. So there's a huge gap between Highland Park and Elgin. And the question really is, we're all in this together, but I think that it's going to impact the super affluent, the upper 0.001%, unless we can figure out a way to deal with this income inequality. It is, like I said, it is getting exponentially worse. And I don't see a quick fix for it. So that's really a concern, the biggest concern that I have. I think that, now that we don't have the former president in office, I think that's a good thing on multiple levels for every part of the world, particularly the US. But I do think that the income disparity and inequality is bad, and it's going to get exponentially worse, and it's going to be a much, much bigger problem, and it'll be much more in the press over the next 5-10 years.
what are you excited about then?
I'm excited about life. Like, I'm real happy. I like life. I'm very excited about, in the family office world. I think that as private equity and venture capital disrupted the public markets in the early 80s because it was a superior model. I used to run a hedge fund. So you can't run a company every 90 days have to report to a guy like me and run it. You just can't do it. You got to be private. And that's why more and more companies will continue to go private. We're seeing that trend. So what I'm excited about is I teach at Stanford. I'm on the board at Stanford, and I've been trying for the last 2 years to have them start a family office center at Stanford University. And you're dealing with the university and its bureaucracy, whatever. Well, about 6 months ago, we got it green lighted. So what we're doing is we're creating a family office center at Stanford University. And the goal is really to help professionalize and institutionalize family offices. Because remember, most family offices, and we represent about 100 of these, anywhere between 250 million up to 30 billion. But most family offices are very fragmented, very inefficient, and very siloed, and they're just not well run in general. Now, I'm making a rash generalization, but that's probably close to 90%. So the goal of and the other thing is that only 25% of family offices make it to the second generation, 10 to the third, and 5 to the fourth. So the model doesn't work. What we're trying to create at Stanford, what I'm excited about, Mark, is we're trying to take this industry and really have it grow up and galvanize it and have it work together. So for the family offices that need the infrastructure, that need best practices, we're going to help with that. And then for the family offices like the Pritzkers, the Dells, the Bloombergs of the world, provide an area for them to network in a safe environment and do it in a way where they're not being sold things from other people. So if we can get this correctly, and I've surrounded myself with some really good people, I think that this will be the preeminent family office conference, and we're going to keep it pure. It's not for profit, and we're just trying to grow the industry, because I do think that in general, the family office model, because it's got patient capital, is a superior model to the private equity and venture capital firms, which have bastardized business by becoming an AUM game. That's a rash generalization, and it's not true for all, but it's true for many.
So I know we see the world similarly. It's a magical, dysfunctional group. So we'll try to optimize it. Speaking of magical but not dysfunctional, Rich Sobel.
Hey, Mark. Hi, everyone. Nice to be with you.
We're just reflecting. I know you've been probably deep in a deal or deals, but we're just talking about today and 2040.
Well, I mean, I think that we all have gone through this coronavirus pandemic, and the last 10 years have been kind of a mixed year in my world in Eastern Europe and Russia. And yet I've kind of been running a family office for 6 years. And I see a lot of what Ron Diamond was just saying, which is that, there is a lot of potential in the family office world. I also see a lot of challenges. So I think that there's a lot of room to bring institutional approaches and long-term planning and strategic thinking and rigor to the family office world. And I think it's, potentially a very comfortable, exciting place to be, because you have the patience and the ability to take innovation and do things that are, well, double and triple bottom line. And that's really what's been motivating me and my partner, Eddie, and conversations with many of you, is that there's an ability to generate attractive returns, backing extraordinary entrepreneurs, and also do things that have social responsible consequences. In general, I think that the internet has changed things dramatically, but ultimately you can't use the internet to establish trust and relationships. So there have to be forums and ways for investment groups and investors and families and entrepreneurs to establish that. And I think that if you have it, you can do business remotely, but if you don't have it, it's very hard to establish it at the beginning on the internet. Personally, one of my pet areas is in education. And, I've learned firsthand through my kids and through some of the organizations that I'm involved in that education is something that can be distributed remotely. And we're seeing tremendous opportunities to participate in that as investors and establish lifelong learning. And this is another theme that I've learned a lot about through this community is essentially the fact that, we're not really doing things the same way. And the winners in business and life are going to be people who are really committed to ongoing learning, sort of continued organizational and professional growth. So those are some of the things that are the most inspiring. I would say that as somebody who participated in the 90s and the 2000s in Russia, and those were some of the most exciting periods. And we used to joke that one year Russia would be the highest performing stock market in the world, and the next year would be the lowest. That volatility. You learn to take innovation and you learn to operate in a challenging environment. But the reason I did it as long as I did is it was very purposeful. We believed that we were making a difference, and we believed in sort of investment thesis. And, to a large extent, that's been delayed or disrupted. That's not really where my focus is anymore. But as I've established my own, kind of outlook, it incorporates a number of the impact sectors and cannabis. And I haven't been this excited in a long time. And I think it's mostly because of the quality of the entrepreneurs that we've been able to interact with. And again, some of it, I see some of the people on these screens who've been introducing really terrific deals. And a good deal with the wrong team doesn't make sense, but a great team will figure it out. So, I'm just grateful to this bunch of people. And first of all, Mark, for creating a very big sharing, safe place. And at some point, you can't have 10,000 people on. But I think at this stage, Mark, you've established a good balance of scale and also intimacy where people are sharing. And it's been great. So, even though I have other things that I needed to do and deals that we're trying to get closed and, raising money and all these other things that seem urgent, there's no substitute to investing time in this. So I'm glad you poked me to get me to come on, and I hope my comments are helpful.
Nice haircut, by the way.
Thanks.
We'll see you in person next week, or actually a few days.
Yeah, Thursday. No, I'm back in the States. It's
Next
great.
week here. Yeah, it'll be refreshing.
Nice to see everyone.
So, yeah, then you were talking about education. That's sort of what we're doing right here, and with all these events, that's sort of a lifelong. I think the alumni model is sort of broken. We need to be sort of created ourselves in a way. That's what we're doing. So who am I? I don't know if I skipped anybody, or I might even skip ahead into the next day. Since people are here with perspectives. And even if you've spoken before, if you haven't spoken, if you just trying to, insights into your industries, countries, or how you see the world, and then at the turn of the hour, we'll go to breakout so you get to meet some people. And but I'm going to do it randomly on purpose. And Stephen or Bill, Bill, you had some themes, but solid spoken earlier. Tom, jump
Sure.
in. Go ahead.
Yeah, no, I can jump in for a moment. I'll try to. It's always better to do it take two, I think that kind of the way that we sit, one, our overall macro view is kind of fairly pessimistic, even continuing on. So we're oriented fairly defensively. I think that, my hope would be that we could move down the road of competitive coexistence as Stephen laid it out. I think that my apprehension is that we might actually move closer towards the world adrift. And in the prior session, I made mention of three things that Stephen's comments sort of prompted prompted in my head. Sort of altruism versus self-interest, rationalism versus, quote, irrational behavior, and then profit maximization versus power and influence maximization. And I think, maybe elaborating a little bit on what I said earlier, is that market participants obviously, focus on profit maximization. And I think, again, that they depend a lot that the world is rational and that kind of at a core that there's some level of altruism, that's there as well. In other words, you don't have people trying to circumvent the system, to game it to their advantage in that regard. But I think, what we've seen kind of locally and also geopolitically is perhaps, again, the rise of power and influence maximization, because some actors believe that that is the best way to achieve their policy objectives. And, I think we can think about it in terms of, China, which, I'm an investor in China. I think there's a tremendous amount of potential that's there that's just like incredible. But the balancing is the, the authoritarian, system that they have. Command economy is great, and a command economy is very treacherous as well. I think last week someone mentioned, brought up the whole China digital currency, and I threw it in the chat that, it's great, except that it's tied to the monetary policy of that issuing sovereign country. It also means that you give up, if you buy into that system, you give up every ounce of freedom and privacy, period, because they can track every single thing that you do. It's a quintessential centralized versus decentralized argument. It's there. So I think that there are a lot of things that have come on the horizon that, if you will, sort of threaten the order and the way that things have been done for such a long time. Not that there haven't, nothing's ever perfect. We always have, the weirdness, but if you just kind of try to elevate it and think about it in these broad brush terms. So that's the thing that, that I'm concerned about. And I think that, this Global Trends 2040 is a great catalyst to think higher level. And while at the same time, we all have to get up tomorrow, we've got to make investment decisions tomorrow, and we have to deal with the cards, that are in front of us. As, a great trader says, trade the chart that's in front of you, not the one that's too far down the road. But at the same time, a lot of us as asset owners, we have to think about the 2040 situations, and that does tend to influence where we are. So that's—
Mark, if I could just add to that, the other side of what Bill was saying about China, if you go back to the developed world and most of the democratic systems, is they can't get stuff done as well as they should, as you could in an autocratic regime. So then you get the question of how do you solve big problems in a democracy? And Juncker a couple of years ago in the great financial crisis had a line where he said, "We all know what to do. We just don't know how to get reelected when we do it." And I think that's one of the fundamental problems for the developed world and the democratic systems is how do you get the strong leadership to make the hard decisions that are going to make a lot of people upset and still achieve what you need to achieve when we have such big problems. I think that's a real dilemma that we're going to be fighting with. And then who are the leaders that are going to move you forward? And you look around the world and in the leading economies, and succession leadership or strong leadership is challenged. And we're losing Merkel, who's been one of the stalwarts, and what happens next. And I think that's a big issue of how do we elect and what are we electing for, and how do we break the election cycle to solve the problems? I think that's one of the Achilles heels of the developed nations. So you have these two sides that have weaknesses, and how do you blend the best of both of them to get where you want to get to, if you can? I think it's a real challenge.
We haven't spoken much about Europe. Maybe that's telling. Lee, you're tied to the UK more than Europe, aren't you? But anyone want to give a view on, what Kissinger's basically saying is, it needs to rethink its vision, particularly Germany. You read through it. Any other comments, views? Or questions to the panelists and things that they've raised?
I just wanted to add very quickly. I think the viewing of history and how the 20th century institutions came about, right, with the Bretton Woods, IMF, United Nations, World Bank, that was a structure that was good. It was a structure backed by the United States, and it was a structure backed by the United States that was willing to pay through the Marshall Plan and create a system that lasted until the 70s and until it started to unravel slowly, and where we are today. The question I have, and this is well into the 2040 view, is, can we repeat that in a moment where the world is under siege by a lot of forces, debt being one very big one. How did we work our way out of post-World War II debt? And it was on the back of those institutions, but it was on the back of the United States, paying for a lot of it, which was fine because there's people that wanted to be part of that order. And then there was another order that coexisted, and we had the Cold War. For a moment, I thought COVID could be that catalyzing event that would have some strong economy in the world step up and have a plan, but the plan also includes footing the bill. And that goes back to that difficult decision that needs to be made at the polls, because that will have domestic consequences as we try to help the international community. Not sure that COVID opportunity was seized. Could be that still may be in front of us, that we can seize that opportunity, or is it going to take another catalytic event, which could be a war, and it could be a cyber war, it could be a combination of a hot war with a cyber war or anything else that will eventually coalesce the population of the United States enough to say, yeah, this is a repeat of the 40s and the 50s, and we need to come out ahead, and this is what we're going to do. I mean, China's trying to do something like that. The problem is, a lot of people don't want to live under the conditions that China would like to impose. So those are some of the questions that I worry about, and I don't see answers to yet.
Thoughts?
I think the economic divergences that exist today are going to make it very hard to get that kind of global cooperation that you're looking for, because internally countries have such big problems. It's hard to help the rest of the world when you're trying to solve your own issues. And again, for politicians to get reelected. So it's hard to break the cycle without really great leaders. And I think the world's been somewhat void of great leadership in politics for a while. And that's a real challenge that we have to work through.
Others here, just trying to go around the houses in the world, so to speak.
I'm just tossing in another thought. I think the world may not be in such bad shape that people are talking about. We see the American economy booming so much that inflation is now becoming a worry. A lot of people have the same amount of gray hair as me, and we remember the days of, going and getting I remember getting my first car and paying 18% annual interest rate because inflation was so high. The economy was booming. I graduated in '82 computer science, and I had a half a dozen job offers. So did everybody else. With what's going on now, we're seeing a booming economy. Multifamily buildings are shooting up in price, becoming almost unpriceable. We have Biden about to spend a couple $1 trillion on infrastructure, rebuilding things like, the It's like the Golden Gate Bridge that was built in the 1930s. I'm doing listen to a podcast about that. You know, huge amounts of things happening now that's just going to just make the economy explode. So I'm not really sure why there's so much negativity here.
Well, they're different currents, right? Winds that are swirling. Uncle Stephen, you want to comment?
I think near term we're going to have a phenomenal run globally, but the bill's going to come due sometime. I think that's the issue, that's the overhang, and the fundamental problems have to be addressed in a sustainable way, which I don't think the stimulus or the relief is doing that right now. It's helping solve a short-term issue, but it's not solving the long-term issue. And I think the structural issues are going to have to be addressed around infrastructure, education, and the like. But the math of the US and other economies is not that great for their balance sheets that allow them to continue to spend at these levels. So if you don't get the return on the investment now, we're going to have twice the problem later. So I think there's a balance to the risks and the opportunities that exist.
I'm going to create a special room for Zale and Bill.
Well, I just want to, Stephen.
But I think what's happening is, then you have disruption, implosion. Everything is accelerating so fast. Let alone what just happened in India for 4 or 5 weeks. That you have, who's going to pay for our treasuries 10 years from now if our currency is not what it is today? If it's not the fiat.
Sorry. I want to. Everybody knows that I'm totally in love with anything Stephen says, right? But I want to push back a little on Stephen in this case. When we ended up, America ended up at the end of the Second World War with a ton of debt. Then it spent a ton of money in the Marshall Plan, and then from the 50s and 60s and 70s, the economy was just on fire for years and years and years from all that money being spent.
But Zale, that was a different world order. I just think we have to be mindful that the Bretton Woods doesn't exist like it did. That's what Greg was speaking of. And the currency, and it was so much disruption, and the technology is a friend and a foe. So we'll just always be on our toes.
I also think it was a lot more collaborative global situation out of World War II, where the world was wrecked at that point, and the rebuild was clear that it was a global need to rebuild. And there, as I guess Greg said, there was a leadership with a willingness to spend. I think the difference now is the divergences of countries, and even inside Europe, which was designed to be one very powerful economic force, is fracturing. And when you have that fracturing, it's hard to get the positive movements forward. So I think a redo of those institutions, the governing institutions, like the World Health Organization, you go through the United Nations, NATO, go through that whole list of economic ones, and they're all antiquated. And the world today is very different. So you need a different structure and a different governing system that's going to be more effective. So I think you can get out of it, but I don't think you can get out of it as easily by just doing what we did in the past. Big adjustments have to be made to make that possible, because the problems are very different now. And the inequality issue may be as great as it's been it is as great as it's been at any point in history, and it's getting worse, not better. And the policies to get out of the problem are further exacerbating it, because they reward asset holders and penalize the people who don't have it, which is why somebody asked in the chat, does this mean we're going to, guaranteed universal income programs and things like that? And a couple of years ago, people would have said, no way. And I think now they're starting to think maybe we are. So I think it's a different world that you have to look back, and all the talk about looking back and learning is right from history, but there are times when history is very different. I think we may be in one of those times that you have to think about it in the context of today, and it's different period.
I think to Zell's point, there are and there will be pockets of extreme opportunity. And the question is simply going to be, for me, at what point do the macro problems totally overwhelm the pockets of opportunities? And I don't really see that happening. I think, and Mark, you comment about the time you spent in Russia. in some of the worst economies in the world, there are pockets of wealth and there are pockets of opportunity. And I think that will continue. And I think, come on, everybody sitting on this phone call today is part of those pockets of opportunity. And I would argue that people on this phone call today really don't understand. We can intellectualize what's happening with the masses, but we're not living it. And there will be opportunities to, whether it's in cybersecurity or as long as the central banks continue to fund the wealth, there'll be incredible opportunities, and education will come with it. And people on this phone call aren't going to share with the mass problems that are affecting on a macro level. And so yeah, taxes will go up, but people will still survive, and people still do very well, and on a relative basis. And so the world's not going to come to an end; it's going to change, and we can't predict how that's going to change. But we should all be very, very happy with the fact that we're all well educated and able to have these types of conversations, and be able to somewhat have a prediction of what may or may not happen, and think about it, and not, my rule of thumb is there are 4 types of people: those who make things happen, those who watch things happen, those who wonder what happened, and those who don't care what happened. And I think we're not, people on this phone call are not in that 4th group. I think a lot of people are in the 4th group, but we're not. So I think we're all.
What did you call them, Simon, earlier? The idiots?
No, we're definitely not the idiots. It was not me. It was Lenin, Vladimir Lenin, who called it the useful idiots. I completely agree with Jim. We're very much not in that camp.
Right.
Mark,
well, I do want to know what we want to, how do we educate ourselves? We thought one of the next ones was going to be the Biden agenda, just to get some people from the administration on and just understand, where the opportunities are by understanding that how that's going to play out. So welcome that tomorrow if you want to join. Sorry, you want to say something, Scott?
Yeah, Mark, I was just curious. I was a few moments late, so I didn't know if it was discussed, but a lot of these points that have been made, and so many good ones, I really appreciate yours, Stephen, were, kind of focused on the extractive economy. And I'm wondering if some of the movement sparked by all of this stimulus money and infrastructure money is going to put a little bit more focus on rebuilding a production economy here in the U.S. as opposed to, the constant push to offshore it, for profits. And, certainly that's what we're focused on the hemp side. I was just curious if anyone had discussed that. Reindustrialization, in other words.
Yeah, absolutely. The onshoring and reshoring is going to be fascinating. What is going to happen all over the world, not just in the U.S., but every nation is going to do that because of the supply chain disruptions and the fallout from that, and also just it gives you more resiliency when you do that. I think the change in manufacturing is going to be just not just in time, but a resilient and repeatable, dependable supply chain process, which that is part of what they were saying in these scenarios is going to create different alliances. But certainly for the US, that's going to be a big opportunity. But I think it's going to go on all over the world because everyone's going to be in the same boat, having to try and secure what they need to be self-sustaining in a world that you don't that's going to be very volatile. So I think that is a big opportunity. And, I just want to be clear to Zale and Jim, I actually am very positive on opportunities and where you can make money. I just think the backdrop for the longer term and the real problems are going to come, and they're going to come with episodes like we've had 2 runs in the last 15 years of financial crisis and pandemics. Those things are real shocks, and I think we should be prepared to invest in a world with a lot more shocks coming. But to bring home manufacturing and other things is one of the ways you can kind of protect yourself from those shocks. So it is a big trend, and it's going to continue, and we have a ways to go with that. And it's all going to be incorporating into the big themes that we've all invested in of tech, AI, and improving productivity and the like. So Ironically, when you think about it, though, they're putting some plants that require a lot of water and power in states like Arizona and Texas. So there's some work to be done on geographic setups, but I think there are big opportunities, and you'll see them go for some time.
So Stephen, I'm gonna open these rooms up. I don't think you want to give your ARS view yet, right? You want to wait until the town hall?
I can do it whenever you want.
All right, let's wait. I think we wait. So I'm gonna click a button. We're gonna go automatically. I'm gonna do like 7, 8 per room. The format is just go around, make sure everybody's introduced themselves, what you do, and then talk about your views on these forces and the scenarios, and see if you can come to some consensus or not. And then we'll come back here.
I have a hard stop, Mark. Thank you, everybody, for this. This is really enlightening.
So we're gonna hit open rooms, and if you want to move around, you can. But I'm hitting it, and we'll come back in about 20-25 minutes. So we're back. We're just talking. Get to meet some people, compare notes, and all that. Just go around the rooms, the houses. What any consensus, or some rooms were just meeting each other. But any consensus on how we see the world, and how Week 361 what kind of events that we can do to help educate ourselves further to figure it out better. Who goes first?
Yeah, Mark, I don't know whether I've missed the earlier sessions, or I was just wondering if there will be any like tech, like deep tech on all these verticals. There's any upcoming sessions on that. I know we had like cybersecurity, which is good. So how about, health tech, ed tech, fintech?
Well, you just labeled all the things that Rich Sobel's investing into. But you guys should meet, by the way. Yes, I'll show you our calendar, which and we're an active group. So if you want, if you're active in health tech, would sound like you were, then we would ask you to consider, co-hosting. That sort of catalyzes it. We get people come around you, and if you come on Wednesdays at 10:30, we go into rooms that sort of mobilize events.
Mm-hmm.
The next one's coming up. There's a space tech, frontier tech right here. It sort of needs a little nudge. We've done some ventures, you can see in the past, and then some twists on it. There's prop tech, ed tech, Omadon. We were just talking about it. So, meanwhile, just connect and look at deals.
Yeah.
Rich, it's got like, how many deals you got going on now, Rich?
I'm not advertising.
No.
We've got a bunch of very interesting things going on, like everybody does. But we're kind of open for arranging some co-investments as we still finalize the arrangements for the fund. So we had our anchor investors are warehousing deals, but we have more supply than we have capacity. So, but anyway, we benefited from referrals from this network, and we're smarter because of the relationship. So we can benefit with more than just money if people want to cooperate. We love the sharing.
But before we just while we were just in the rooms, if anyone's got some reflections, like who are some room leaders, just to share some reflections.
Bill, can you take our group?
Yeah, Luke? Stephen.
Go ahead, Luke.
I was just going to say, Stephen and Bill were having a good discussion on the geopolitical climate and how that's really going to play out in the next 20, 40 years. And it's complicated. There's realignment, and it was a good discussion. And, I have some follow-up questions on that, when there's another slot to kind of continue that conversation, because there's some two key areas that I really want to talk about to get Mr. Burke's and maybe Bill's perspective on too.
Well, keep in mind, Stephen's here every week on Tuesdays, so he's open to ideas on what to talk about on Tuesdays.
And Bill's doing weekly deep dives, right, Mark?
Yeah. He's on too. He's doing virus, and he'll do cybersecurity part 2, 3, 4. Anyone else?
We talked more about, as opposed to one of the actual predictive scenarios, talk more about education in terms of deficiencies kind of in AI awareness, AI fluency, and does that hold our labor pool back vis-a-vis other countries? And what do we need to do to really bridge that gap in terms of bringing our AI fluency up to a level where we can augment our jobs and produce more value by working with AI instead of against it? That was one thing we talked about. And then we just talked about renewable energies, the economics on that, when the cost comes down and when we think we can make reasonable switches to really make a dent in renewable energy as a go-to source. Those are the two things that we talked about.
Well, can that lead? Well, we will have a built environment event, and as far as AI goes, now that I'm reading the Kissinger thing, I definitely think we need an AI focused. I don't know if Nice is on. Some of the people from the FinTech world can help us there.
I even think a session on future economics, as far as new government policies on economic support, and also the interaction with cryptocurrencies and how that's going to affect different things, is a real big. It's a black box for a lot of things because it's cross domain, and it's I think we touched on it here in a little bit within the last session we did in various ways, but not really kind of talking about what really is going to happen, because you're going to get into situations where if nation states or countries lean more in the digital currency, it's going to really disrupt a lot of normal things, and policy is going to have to change and shift to adapt to that. And you're going to get into stuff in this.
Stephen Burks touched on that in a couple of different sessions. We are going to do a Biden administration, which I thought where you were leading.
Yeah,
but we'll that might maybe Stephen, we could talk about how to cover that again. Other rooms. I just love to hear Jack Wyant speak. So what did you guys talk about?
Well, Mark, ours was the most humanistic of all the groups, because we shared the joy, the underlying joy and excitement of meeting each other and learning selected kernels of info. And there it is.
Yeah, we'll share in that spirit, share a kernel of info.
Well, I'd rather share one from somebody else. How about John, the San Franciscan? Is he living happily ever after out there, staring at the Bay Bridge, or at the Big Bridge?
John Morgan.
I first have to answer and say this is a facade behind me. I'm in Massachusetts. So as much as I'd like to think that the tax structure in San Francisco is a lot worse than Massachusetts, so I'm okay being here, although I think the weather might be probably a little better in San Francisco than Massachusetts. So, but I don't know if you wanted some of my comments that I had, but I went at the world a little bit just from my investment in a global and more public market standpoint, and just my experience having worked in emerging markets for a while on the conversation about the command economy in China versus India, and just wanting to make sure that when you think long term, I just think the Chinese will be competing against the US, obviously already, in anything that's a critical industry. And they have the ability to move faster, and you can just see how long it took us historically in the US in the Industrial Revolution versus what China's done in 15 years. They are right there on our doorstep. And the comparison to me, India is many times a great investment, but as a country, it's got the democratic backdrop, and things take a long time to get moved around and moved forward. And you just compare the two, both have robust populations and lots of great things, but China is just able to move a little bit faster. Not a great place maybe to be supportive of human rights, quote unquote, but You know, if they want to get something done, they put it in their 5-year plan and they really push like heck, and they tend to achieve those goals. So I think if you're investing globally, you have to seriously consider it. It's 40% of any emerging markets benchmark, and you do have to pay attention to you know, those exposures. So that was just part of the conversation I had. And again, nothing against India, which has been a great place to invest too, but it's just they're very different approaches.
Well, we should talk about what managers to back in those emerging markets. Others? Simon, is your group covered there already?
Yes, John and Jack were the best speakers in our group, even though Richard did very well presenting the points of view of UBS. I would just say that the quick conclusion is that we all need to move to Florida, where Rob Clarina is right now. That's the fun place, and it looks like that place doesn't have any problems. But talking about the geopolitical kind of connotation of our today's meeting, which came up, I guess, unexpectedly for at least me, I would say that people in the United States don't have this perception of the power of authoritarian rule. And I want to just share a few observations. Number one, the Marshall Plan was the authoritarian rule. There was strings attached, and that's why we remember that it was very successful. China is doing very well in this realm, but I also don't want to overemphasize it, because I remember when I came to the United States in 1986, and I got the exposure to what I thought were a very chaotic way of the public discourse. I really was scared that the Soviet Union would take it over very quickly, because Soviet Union looked like a huge united force, and then 5 years later it completely collapsed. So there is a huge advantage to the democratic flexibility, but again, at some points, of course, the authoritarian rulers are much more efficient than us. Thanks.
Well, there have been moments when our backs are against the wall that we come out authoritarian-like.
Mark,
Yes.
hey, Mark, Jack, I have something to share that we did talk about in our group, but it might be of interest because pursuant to its broader implications, and that is I conveyed, as you may know, the fact that our son Chris Wyant, who lives in Chicago, and who spent 8 years in the Obama White House and 4 years at the Obama Foundation, just left a couple months ago and became CEO of a newly formed entity called Made to Save, which is being referenced generally as MTS. And Made to Save is a nonprofit, was created with a 2-year life that started a month ago, funded with $30 million from some major foundations, and its purpose, in essence, in an objective or numerical way, is to drive America's vaccination level from 70% to 85%. So the foundations have turned to Chris and the 30 people that he's hired, and the affiliates that they're connecting with throughout the nation, through organizations and church groups and whatever. And they're basically saying, look, the country is going to get to 70 under the various initiatives that exist now. There's 15 points that you're going to go find in difficult places, locations. They're going to drive some people to their vaccination. They're going to penetrate neighborhoods that are less concentrated vaccination-wise. So as a family, we're all excited that one of our children is driving an initiative that has that level of public health importance. What I think might be interesting for all of us is there does seem to be kind of an alphabet soup collection of various entities, programs, initiatives that are driving toward that end goal. And while the prior administration, fumbled its way along, and this administration has clarified the efforts, it still takes not the federal government, but a whole bunch of others, such as this one example, to achieve the desired end result for the population as a whole, or at least for 85% of it. So proud of it, but sharing it just because it's another, it's another piece of that complicated puzzle that we never heard of until March of last year.
Mark, you're on mute.
Thanks. So then I
You owe yourself a beer.
Yep, I happily. So the it goes to the virus event. I don't know if Bill has a place for it, or it could be an enhancement, or he can come and give a point of view, or on our philanthropic side, maybe that becomes sort of one of our, because we've been talking about what our core issues that we as a community want to get behind. We were talking about inclusion, access to education, maybe access to healthcare and vaccines could be an issue that he could speak to.
And it certainly is a global one. We tend to all think and talk in terms of U.S. numbers, but it's a much bigger world than we occupy.
Absolutely. So are all the other groups, quote unquote, represented for voices? Be more specific. And a few people are new to me in a little way. Jesse Heisler, could you introduce yourself, at least for me?
Yeah, sure.
We try to be a community that knows each other, so I'm just in that spirit.
Yeah, well, first, Mark, thanks for the invite. This is awesome. My name is Jesse Heisler. I just started in the finance world last year, and it's come from software sales, and have been able to kind of transition the relationship and network kind of experience that I have with my previous career into this, but it's fascinating. I'm thoroughly enjoying it. This session has been very educational. I've been a silent member, but very much appreciate it.
Great. Anyone else that's new? Sue? I mean, Ala, I know, but Ala, you're new to the group. If you want to maybe introduce yourself. Wotana.
Yeah, somehow I can.
You're almost there. You just gotta get the two in combo. You gotta now unmute. Oh, no, you're on mute still, Anna. Ala, sorry. Ala, you're on mute. There you go. Perfect. Don't touch the thing. Go.
Yeah. I'm Ala Smirnova. I've been known Mark for many years by now. We worked for Ernst & Young back in Moscow when Russia had better times, I guess. Yeah, so I'm a lawyer. I'm a corporate lawyer. I do investments as well. And I just moved to Houston from Singapore. So just 3 months ago. Yeah, in Singapore, my last job was in family office. Before that, I worked for a private equity and venture capital fund. Both, I did both legal and investments during recent years. And before that, I was the head of legal for EY, and I worked for Shell at the head of legal for Sakhalin II project. So, yeah, so I'm looking for opportunities right now in the US, in Houston in particular. I would be happy if you have connections in Houston, you would introduce me. Yeah, and so hopefully, so I will find a new way and something to do here in the US. And I'm very thankful to Mark, who who keeps our friendship good. And yeah, and I would be happy to meet you guys. Thank you.
Again, I just introduced her to Chris White. Did you guys connect yet in Houston?
No,
Okay.
not yet.
Okay. I'll make sure you do.
Not yet. We will. Yeah, we will. Thank you, Mark.
This is part of our talent connectivity. Is everything? Who else is new? Sue or Raj? Julia, we talked about. It's good to connect with you, Vasilia. We're gonna do more together. Anyone else want to speak before we break?
So maybe Alexei. Alexei, if you are there, do you want to speak?
Oh, yeah, you've already introduced someone into the network. That's great.
Yeah. So
I'm
not
here,
sure.
yeah, but I don't have much to add.
Well, just
Yeah,
introduce yourself, just so we
Yeah.
know your story.
Yeah, well, the story, let's see if it all works. Yeah. My story is pretty simple. My name is Alexei Beltikov. I moved to California from Moscow, what, about 7 years ago? And worked mostly in operational turnarounds and in energy, both operationally and investment-wise. I am a founder of several enterprises in energy transition, and including my current company that is also an energy transition company that helps the traditional oil refiners move into the greener world. So that's what I do. I'm happy to help, and very happy to connect to people with similar interests.
You're still active with Skolkova?
Not so much. I mean, other than talking to friends there, not really. I mean, it's that sort of organization has moved fairly far away now from what we initially conceived it to be, and so my help is no longer needed there.
Got it. Well, good. Well, energy tech is a theme among several. Приездом.
Спасибо.
Anyone else? Rainer, you see anything interesting? John Pagley will talk later about venture. I mean, one thing I might just give a sneak peek to, and we'll be back tomorrow in the early morning for Asia. But this is sort of how I'm seeing the world. Let me turn on. It's like an Arthur Anderson map. It doesn't look so nice now, but we're getting. I'm looking for co-leaders inside our banking group, and then in the community, by industry. So cannabis, you've met Anand, and on, and then by asset classes, whether it's one or two people, and then you might have, for example, an Israeli cannabis venture fund. So all three come together. So you'll see that's how we're. And then we do have philanthropy up here. It's not really an asset class, but sort of the fifth dimension. So otherwise, we've been on for a while. I think there should be limits to these Zooms. So we can go back. But if you want, I do the offer, the ask remains if you've got other ideas on what you think we should be doing, and particularly if you want to put your hand up and help. Jack, I think you sort of quasi-volunteered one of your homes to have a 361 retreat. So I'd love to make that happen. It sounds like we'd use the hotel for overflow. When I do gatherings, I'm Texan. I'm a Russian about it. We're all in.
Well, I guess we'll assume the risk of being under your control and dominion.
Yeah, he speaks like a lawyer. It's because he is one. All right. Well, everyone, thank you. Tomorrow will be more of an Asia focus. It'll be really interesting given all the themes we were talking about today. So, I mean, it's not just China. So you know, it's a lot of the growth markets just outside, but including China. But appreciate everyone's time. Thank you, thank you, thank you again, Stephen.
Thanks, Mark.
And see you soon.
Thanks.
Thank you.
Everyone.
Bye-bye.